Hi, this is Lizzie, and today we're going to talk about the EdTech industry and what's driving its current growth. It's very clear that the EdTech market is one of the biggest winners in the COVID crisis right now. What we're seeing is a huge amount of online traction as consumers come to online providers to look for courses at this time. The other thing we're seeing is a huge amount of investor interest, and that means funding will be coming in the way of a lot of these EdTech companies, and that creates an opportunity for partners like us to help them drive more adoption. So it's very obvious if you think about why EdTech is booming right now. We think there are three main factors at play. One is simply that people are more likely to be stuck at home at this time. It's a great time to take up a course. It's also a great time for parents to invest in their children's education, knowing full well that their school might not resume for another few months. So there's a lot of pent-up organic demand for digital education in the time of lockdown. But there's a second factor as well, which is that in times of economic uncertainty, you will always see a demand for consumers wanting to upgrade their skills and basically make themselves more employable in what's going to be a more competitive job market. So we're seeing a particular boom in upskilling courses where people are wanting to learn new skills and really develop their CV. But there's also a third factor at play, and that's where we come in. And that is that the availability of digital financing solutions, or EMIs, has been increasing in recent months. What that means is it's now even more affordable for customers to take out these courses, and these products are actually finally reaching the mass market because you can pay a few $1,000s a month and actually finally get your dream course online. So digital lending has been one of the key factors in driving adoption of online education, and we've seen that growing over the last 2 years. Remember that in the India market, less than 30 million consumers have a credit card today, and actually a credit card is probably the wrong way to purchase an online course. These courses can cost up to 1 lakh, and blocking your credit limit by that much for up to a year would be quite bad financial planning. So what's happening is these EdTech companies are teaming up with EMI providers like ZestMoney, who have created bespoke products that allow for an instant digital online EMI creation. Now, you might ask, why aren't banks doing that? But it's actually very challenging for banks to create these courses online in a digital way to match the experience of the course provider. And so what companies like Zest are doing is working deeply with the EdTech providers to create a product that works alongside their product. So it's a real win-win for technology innovation. So what's happened in the last few weeks particularly is we've seen a lot of either new EdTech providers coming online or existing providers looking to companies like ZestMoney for partnership to help them drive more affordability in their courses. One thing we've observed is much more mass market adoption of these courses over the last 1 year, and EMI has been a massive driver in making these courses more affordable for this segment. So one of the really interesting things we've seen over the last few weeks at ZestMoney is an increase in applications from consumers who previously would have been described as prime from a bank perspective. These are customers who probably have access to credit cards and in the past would not have used an EMI product for purchasing a upskilling course. But what we're witnessing is, given the economic uncertainty, these customers are choosing EMI because it gives them a lot more financial flexibility. And at times like this, we do think that EMI solutions are one of the best ways to pay for expensive items because it gives you a way to spread the cost and therefore manage your finances in a more prudent way. The other really interesting observation is that we've seen a massive increase in applications from women at this time. So more than 60% of the applications in the EdTech space are coming from women, which is higher than average. We suspect that this is because they're thinking about their future career options and wanting to make themselves more attractive in what's going to be an increasingly competitive jobs market. We're really excited about the EdTech space. We see such a great synergy between EdTech and financing. In many of the partners that we work with, since they added an EMI option, they've seen their revenue increase by up to 40%. we think there are going to be even more opportunities for innovation in the way that EdTech partners and finance providers work together. One example is what we're calling an income share agreement. Income share agreements have been very significant in driving adoption in the US of online courses, and we believe that they will increasingly become a part of the landscape in India. So we're working with our EdTech partners and our finance partners to design truly innovative products that will drive affordability in the EdTech space and genuinely bring access to education and access to finance to the widest possible group of customers in India today.